Joining me now with more on markets is Phil Rosen. He's co-founder and editor-in-chief of Opening Bell Daily. Phil, great to have you.
Thank you for having me.
Yeah, so let's get your take on where we stand right now in markets.
So we have the shutdown ending, but markets pretty much haven't even reacted to the shutdown for about a month. So it was pretty much a non-event for investors. And we have presumably another Fed rate cut or two in the coming months. Fourth quarter is very strong for markets typically. So I see no reason why the bull market's not going to continue into next year. And right now we have essentially all the tailwinds that we've had most of this year are still in place, and the demand for the AI trade is only accelerating.
Okay, so let's talk about that trade because we had seen some recent weakness. Of course, AI has been a hot topic for a long time, but amid a 40% plus rally rate from those April lows led by these AI names, people are starting to say, is it a bubble? Is it too frothy? Are these valuations too frothy? What do you think?
Yeah, and that's the hottest topic right now, comparing it to the dot-com bubble. And I've been plenty of times talking about this on air. It's not the same thing as what we saw in the late 90s and early 2000s because these companies are so big, their balance sheets are so robust that comparing them to these dot-com companies doesn't really make much sense. And if I were to look at the market and point out where the froth is, it doesn't make sense why we should be complaining or concerned about all the capital flowing to these big tech companies. Instead, we should be looking at the small cap names that are getting so much attention right now. So the Russell 2000 has outperformed the S&P 500 or S&P 600 small cap index by about 9% over the last 100 days. That was from a note from Data Trek Research yesterday. And what they were essentially saying was that the animal spirits are so high that these unprofitable small caps are getting bid up, essentially. And to me, that's more of a concern or a risk in the market than all the money going to the Mag 7 because they're spending billions of dollars to make sure this AI bet pays off, and their balance sheets are still fantastic. So as far as the AI trade, I'm not worried about that one slowing down.
AMD and Han Hai, certainly their results bullish for the AI space in the past 24 hours, and we see that reaction in extended trading this morning. I want to ask, though, about AI's impact on the jobs market, right? Because during this shutdown, 40 plus days, longest in U.S. history, we haven't been getting that monthly jobs report, nor have we been getting inflation data. But announcements from the private sector have indicated that the jobs market is slowing. What do you see as AI's impact on jobs?
Yeah, that's a great question. And I think eventually we're going to see AI restructure the labor market. I don't know if it's happening exactly today. I think a lot of companies are making a bet with current layoffs that AI productivity is going to eventually make their way into their companies. And on an individual, anecdotal basis, I hear it all the time. People can use these tools and do a lot more work than they could 2 years ago. So if you expand that to the company level, then companies, if they are getting more productive, it makes sense for them to shrink their headcount. I'm not sure if it's exactly the thing to justify hundreds of thousands of layoffs. I think Amazon just announced more layoffs this morning. But I do think that we will see AI shrinking the labor market while making companies more robust, more productive, probably in the next couple years.
Now, another factor that's been at play this year is tariffs, right? Trade, the impact of trade, and certainly we saw a lot of volatility impact stocks in April. A tiny bit of that return in the past few weeks or so, a few weeks ago, I should say. But now this idea that the president has floated of a $2,000 tariff check or dividend, if you will. What's your take on that?
I have no idea if these tariff dividends are going to pass, and I think there's already been a lot of pushback on if that's the best way to use that money versus, let's say, paying down the national debt. But I do know, if we look back to the pandemic stimulus checks, when the first check hit until the third check hit about 8 months later, the S&P 500 went up 40%. So if we see anything close to that because of these dividend checks, and who knows, maybe Trump comes out and he says we want to send 2 or 3 like they did during the pandemic, I think that's a massive juice for the stock market. But also, I know he said it's only going to go to non-high income households, so maybe middle and lower class Americans. But even if that happens, high-income households are the ones that own assets and they're in the stock market, they're investors, so they will see a huge upside even if the tariff dividends don't go to them because they're the ones that are holding assets, and those assets are probably going to explode higher if these checks come to fruition.
It is interesting to see how this will all come together. Phil, we have just a few weeks left in the year, but between now and year end, of course, we'll get NVIDIA's results, right? It's kind of the last of the main semiconductors to report, which will be important because it's one of the most valuable names in the major indices. And we'll get that Fed rate decision. So let's start with NVIDIA, expectations there.
Look, anytime you try to doubt NVIDIA in the last 2 years, they'll surprise to the upside. I'm expecting them to beat expectations. Maybe they're going to beat it less than they have over the last couple quarters. But everyone that's talking about a bubble, to me, how could we be in a bubble if all these companies keep saying they can't even keep up with demand for their products, NVIDIA included? So I think NVIDIA is going to be great. I don't know if we're going to see a cut in December, but I think expectations for a cut starting in 2026, that's going to be enough to fuel markets higher into the end of the year.
Okay, and yes, that Fed rate decision, do you think a government reopening would help solidify that? We've seen some divisiveness among the Fed members in this shutdown simply because they haven't had the data that they normally would.
Yeah, I think the lack of economic data, frankly, the economic data has been hit or miss all year anyway, and I think the reliability of that data has deteriorated. So even if the Fed and policymakers come out and say, we don't have the data to make a decision, I think because we're going to get a new Fed chair anyway in the next couple months, rates are going to collapse to whatever Trump wants, and he's called for 300 basis point cuts. That's not going to happen, but I think rates are going to compress a lot in the coming months. And of course, that is fuel for asset prices.
All right, Phil Rosen, co-founder of Opening Bell Daily, here with me in studio. Phil, thanks so much.
Thank you.
Great to have you.